This week, you might have seen reports that UK wages have been rising fast, with some headlines saying that pay growth has been surging. The ONS released their latest figure showing that UK employee wages grew 6.9% compared to last year. At first look, you might think this sounds impressive. It's almost as high as the summer of 2021, and before that, we've not seen pay rise anywhere near as fast. However, what some of the headlines fail to report on, or just mention very quickly, is that this doesn't tell the whole picture. So let me dig into these details, explain what's going on, and try to answer the question that explains why UK wages are actually getting worse. So with this data just updated by the ONS, we get the big headline grabbing numbers that tell us how average total pay with bonuses has gone up 6.9%. And then regular pay, that's the number without overtime and bonuses, has gone up 7.3% year over year. In a normal year, that would be a pretty big jump, and if you get a 7% pay rise every year, you're probably going to be laughing all the way to the bank. Now, the real issue is what they summarise in the second point in this report, which some articles in certain newspapers don't really want to address. And that point is, and I quote, "Growth in total and regular pay fell in real terms by 1.2% for total pay and 0.8% for regular pay." That means that both of those are negative numbers, meaning a fall in pay in real terms. What's real terms? That's the number you get once you take the increase in the price, but then you minus the effects of inflation, which is so critical, but often gets left out or pushed to the side, at least when it comes to some of those headlines. I mean, just look at this one. Public sector pay growth surges to 22-year high in a blow to Jeremy Hunt. It makes it sound like people who work in the public sector are somehow driving around in Lambos and sipping on champagne. It might be the biggest pay growth for a long time, but yet again, it doesn't tell the full story. Let's dive into this in a bit more detail then. In the same report from the ONS, we've got to take the look at this chart showing us real wages, as to be honest, this is all that really matters. If your pay doesn't at least match inflation year over year, then you're losing out. You might see the same amount of cash in your bank, but that money won't buy anywhere near the same amount of stuff. Understatement of the year right there. You don't even need me to tell you with everything that's going on right now with the cost of living crisis. Anyway, back to the chart. Look closely at these two lines in this green sick colour and this burgundy one, which represents total and regular pay in real terms. If I draw a line at 0, what we now need to focus on is every time these lines drop below the 0 mark shows a real pay cut, and every time it gets above, it's actually a real pay increase. Now, going back to March 2001 when this graph starts, you can see that since the global financial crash, things have not been looking good here in the UK. And although we had some growth and a spike post-COVID, the general trend has not been looking good. Also, bear in mind that there's no difference here between public sector pay and private sector pay. That's something we do need to tackle separately. There's been a lot of talk recently about the wage price spiral, which is what apparently happens when wages keep rising alongside those prices. You end up in a never-ending increase, which is no good for anyone, as the value of your money will keep getting eaten up by inflation. The issue is there doesn't seem to be any good examples of this really happening, and many economists have referred to it as a myth because the cost of wages is just one of many costs that go into producing a product or a service. At the moment, we're seeing some super high inflation, but it's not just being caused by wages being put up. There's a huge range of factors that contribute. Obviously, we've had a huge amount of money pumped into the economy, there's no denying that, so from a very basic standpoint, more money chases after the same stuff, prices go up, economics 101, right? But then we've also had the shock of energy prices, and the UK has put itself in a horrible position for a number of factors, some that are in our control and some that aren't. Now, those energy prices then flow through into pretty much everything, and I think we sometimes forget just how much impact they can have. The UK relies heavily on gas imports to not only provide the heating for homes, but also to feed power plants, and while the cost of energy has been falling on the wholesale market, the prices we pay as consumers has taken a long time to filter through. Now, just putting that to one side, because honestly that's an entire rant that needs its own video, why aren't increases in wages being celebrated or supported? This week, Andrew Bailey, the Governor of the Bank of England, gave a speech at the annual Mansion House dinner where he said the following.
But the interaction of above-target headline inflation with labour market tightness and demand pressure in the economy has made underlying developments in goods and services price inflation more sticky than was previously expected. And both price and wage increases at current rates are not consistent with the inflation target.
So in summary, he reckons that wage increases are not helping with inflation, and also reminded us that we're still in a pretty tight labour market, meaning that unemployment is pretty low. Yet, even with all of this going on, as we've just seen, the increases in wages still aren't keeping up with inflation. Only time will tell how quickly inflation will come back down to normal, but don't forget that unless we see negative rates, then prices are still going to rise, just at a slower rate, which is called disinflation. If you want to see deflation, that's when you actually need prices to actually reduce and become cheaper than they were a year before. Now, I'm not a fan of trying to make predictions about anything in the world of finance, but I will at least show you what some other people have put together in terms of how long they think this will last. On screen now is a forecast by Grant Thornton and Retail Economics showing how long they think this current squeeze is going to last. This orange box is the future, and it shows they think that we have about 10 more months ahead where real wages are going to be eaten up by those higher costs. They think that over the next 10 months, up until May 2024, the average household is going to be hit by £2,300. Now, for some perspective, that's about a full month's pre-tax income for the average earner in the UK if you include all part-time and full-time workers. For a full-time worker, that amount would be almost 80% of an entire month's wage, even before taxes are accounted for. Let's check in next year to see how their predictions got on. Take it with a pinch of salt, but it's still a reminder of just how bad inflation is on your wages and how really it's a kind of stealth tax on your income. Now, on the same subject, just diving a bit deeper, I'm always conscious that inflation and the cost of living hits people very differently depending on a huge range of factors. Just going back to that latest ONS data again, it's worth reminding ourselves that public sector workers and private sector workers have experienced a very different set of problems. We've seen recently a huge number of public sector workers go on strike and also take to social media to complain about their pay and conditions, which for many haven't changed for years. Now, as we've just seen, inflation causes a huge amount of pain to real wages. And if you don't get pay rises that keep up, or none at all, it may as well just be called a pay cut. Junior doctors are one of the groups calling for pay increases of more than 30%, which grabs a lot of headlines for looking like crazy high figures. However, looking at how this has been calculated, it's easy to see how pay rises as big as this can be needed if you do fall behind after inflation through many years. Now, the British Medical Association suggests that pay for junior doctors has fallen since 2009 by 26% once you take inflation into account. Therefore, to make earnings come back to level, you need to actually raise them by 35%. It's the same as how the stock market works. For example, a 50% drop in a share price needs a 100% gain to get yourself back to level, not just a 50% one. Now, just for contrast and to be fair, the IFS suggests that what they're asking for is based on an outdated way of measuring inflation, which is the RPI method rather than the CPIH method. And when you change the method you use, you get about an 11 to 16% drop. Still though, not a good place to be in. And this is echoed across other areas of the public sector like teaching, where they've also experienced drops of around 10% since 2010. There might be much greater pension contributions in the public sector and more benefits when it comes to holiday and sick leave, but trying to get by making less and less money each year is not a fun place to be in. And honestly, I just don't know how some people get by year after year and put up with it. Hats off to you. Jumping to the private sector, there's a lot more nuance as it really depends where you work, what you do, and what sector you're in. The data shows us that generally private sector workers have experienced greater pay rises compared to their public sector equivalents, but either way, a lot of sectors are falling short and putting huge strains on incomes up and down the country. For example, one of the industries that has seen some decent pay increases is the finance and insurance sector. Now, this graph might be a little too small to see from the ONS data, but this little blue line is showing how this sector is paying more than the wider market in terms of pay increases on average. Now, interestingly enough, this sector is also the highest when it comes to average pay, where the median salary per month is more than £3,700, which is £1,400 a month greater than the current UK median average pay. I think it would be hard to say that wages in the UK are all low. It really does depend what you do, where you live, and then what kind of money you're spending as well. I've done a couple of videos on this topic and I've also compared the UK to the US, so don't forget to check those ones out after. Now, the key question is, what can we really do about it and what's the way forward? This is a really tough one. Firstly, I think that being aware of the effects of inflation on your income are really important. And then if you do work somewhere with no pay rises for multiple years, you are being paid less without even really knowing about it. Having real wages fall and not keep up with inflation is as close to theft as you're going to get. So being aware of it and ensuring that you're paid fairly and get pay increases is extremely important. Now, while that might be okay in the private sector, the public sector have to kind of bargain as a group, and the solution isn't really quite as simple. And it feels like they have to go on strike just to get a pay rise in line with inflation all the time. Personally, I'd love to see pay just get automatically increased in the public sector anyway, with inflation each year in the same way as we've got the triple lock for pensions. I mean, I don't see why pensioners are treated any differently from those on the front line of critical services. Just set it in law and pay people fairly. Nobody goes to work for the public sector thinking they're going to become rich. They make a lot more money working for the private sector. Also, if automatic pay rises was the case, this would be a lot better incentive to keep inflation under control, because if we don't, then the public sector wage bill goes up and the government of the day will be responsible for finding that extra money behind the sofa. Now, please tell me that isn't some crazy idea, and if you have any better solutions, do let me know below. Anyway, I hope that clears things up. I just wanted to make this video because I just saw so much reporting claiming that increasing wages was somehow a bad thing, yet very few articles focused on the real wages aspect. And also, I know this is only a short video and there are a huge number of factors that can explain wages in the UK, both in the private and the public sector. You can argue about lack of productivity, lack of skills, blame young people, blame old people, and we haven't even spoken about the B word yet. No, not Bailey. You know what I'm talking about. Feel free to add some more in the comment section. I'd love to hear your thoughts and ideas about what your industry is doing. Anyway, thanks for watching. Drop a like on the way out. And if you haven't watched my video on what people earn in the UK, I'll leave you that one on screen now. Find out how you compare to the rest of the country. As always though, happy investing.